one thing that Jerome Powell mentioned during the FOMC conference after the announcement is that he mentioned the rise of unemployment. That's why they felt that, hey, the market is not supporting this very well, so they want to come in and quickly, add more heat to the market, right? By lowering the interest rate so that the market will not go into a recessionary. Is this going to happen? Is this something that we should be concerned with, right? So let me bring on Ethan, who has a very interesting view, I must say. That's something that I have not thought about at all, okay? And I want you to listen to him carefully so that you can position yourself, right, going forward in terms of how should you invest, right, as an individual investor based on what is going to happen to interest rate, okay? Okay, so guys, welcome again, all right, to the market update. So tonight, it's going to be a very, very powerful show, right? So ET says, I win 50% of the bet. Maybe, maybe. Okay, but anyway, it's going to be a really interesting show. Why do I say that? Because it's going to be a comprehensive live stream, right? So we're going to talk about different asset classes, how you'll be affected, right? So let me just run you all through the scope first. First half, I will bring in Ethan to talk about interest rate. What he project from his angle as a mortgage broker, and how will the bank proceed from here? Okay, how will the interest rate float from here? And then I want to start by talking about stock market, how I think this will impact the stock market, and what you should do. How should you position yourself at this moment? Okay, right, as an investor. Okay, maybe I shouldn't say what you should do, what I will do. Okay, none of what I'm going to say is investment advice. What I will do and whether I will hold a lot of cash. And later on, at the second half of the session, we want to talk about the different asset classes. Whether interest rate going down is good for example, cryptocurrencies, gold, bonds, real estate. And especially for those of you who are in the real estate, the very interesting thing is, before this pre-show, I was just talking to Ethan. And he said, previously, he did another live stream with Chloe, and there wasn't some information from the banks yet because it was too soon. But today is just nice. Okay, so sometimes maybe doing live stream later is good. Okay, because just last night, they just got the latest updates from major Singapore banks. Okay, later he can show us some details about what are they going to do in terms of the borrowing rates, right? So for those of you who have a mortgage, right, who have a loan with the bank, later on you want to stay back to listen to this part about what's going to happen to the Singapore mortgage rate. When is it going to change? And how should you position yourself? So a lot of things tonight, from investing, stock market, different asset class, up to even taking mortgage loan. Okay, right? So it's going to be a damn powerful show. I don't know whether we'll overrun. Most likely we will. Okay, so right now, what do we see in the market? Okay, so once again, we had a 50 basis cut, a very aggressive cut. But the more important thing is, I think later Ethan will talk about it, is that this is the first cut. First cut. Okay, in fact, right now, the projection is they're going to cut at least twice this year. Some of them are projecting the next one is going to be another 50 basis cut to cut a full 1%. But the important thing is, right now, FOMC also projected the next few years, how are they going to cut, right? So I think this is very important. And one key thing before I bring Ethan in is that one thing that Jerome Powell mentioned during the FOMC conference after the announcement is that he mentioned one thing that got him a bit concerned is that the rise of unemployment. That's why they felt that, hey, the market is not supporting this very well, so they want to come in and quickly, add more heat to the market, right? By lowering the interest rate so that the market will not go into a recessionary. Is this going to happen? Is this something that we should be concerned with, right? So let me bring on Ethan, who has a very interesting view, I must say. That's something that I have not thought about at all, okay? And I want you to listen to him carefully so that you can position yourself, right, going forward in terms of how should you invest, right, as an individual investor based on what is going to happen to interest rate, okay? All right, so guys, please join me to type in the chat, type in CCC to welcome Ethan to join us. Okay, so let me stop share first. All right, Ethan, can you hear us?
Hello. Good evening, everybody. Can you hear me loud and clear? Is
Yes, I
everything
can hear you.
okay?
I can hear you. Awesome.
Thank you. Hey, so ladies and gentlemen, what a turn of event. Mr. Jerome Powell decided to give
So before you
all of
start,
us.
where's my $10?
Okay, so
Hey, see,
everything.
everybody remember $10.
All
$10.
right. So
$10.
today I am very
Hey,
happy
everybody
to
help me type in the chat. $10.
$10 is $10. I got
Hey,
something a
wow,
little
this
bit
one
more
limited
special
edition. This
for
one
you.
limited edition.
This is $10, but this is the Lee Kuan Yew coin. I will pass you the later we meet. All right.
Wow, this
Thank
is
you
worth
so
way more
very
than $10
much.
already.
All right, ladies and gentlemen, I am so happy that this happened. There has been a lot of things that happened. And I'm so excited to share with you guys. So let me share my slides and let's get started with everything that we have prepared for you tonight. Okay, everybody can see my slides. Today we are going to go through the September FOMC update. Like I said, this is a hell of a banger because Jerome Powell did many things today. Okay, we're going to talk about the economic update so that you all know what is happening within the economic space, and then that may translate into better returns when you do your investing. Knowledge is power. Let me arm you guys, yeah? So Mr. Jerome Powell has chopped the rates from 5.33 effective to 4.83%. All right. So at this point of time, this is the first thing that you want to know from the latest update. But what is going on? What is happening in terms of interest rates, and why as Singaporeans we should be concerned about this? Singapore don't control interest rate. Typically, we are below US interest rates, and MAS gives up control over domestic interest rates, and US interest rates have typically been higher than Singapore. Domestic interest rates have been typically been below US interest rates. That is within the MAS document. This is the correlation over the last 19 years. These are the current SORA numbers. Later, I will talk a little bit about what's happening in terms of SORA. So much reaction in the latest few days after the cut. And this will then tell you guys that we are really quite correlated with the US. If you look at when the cut took place, it is 18 September, 19 September. This is where the cut took place. And right immediately, you can see SORA dropped from 4.3% to 3.4% to 3.1% and has been holding around there. Are you guys able to see this? All right. So there has been a drastic fall in SORA as the effective federal funds rate been cut. SORA has not stabilized at this point of time, and banks are still having their meetings. The good thing about you guys being here, you have me, your friendly economist, telling you what's going on. The banks will still go through layers, and at this point of time, they are then deciding what is the fair rate, what is the equilibrium to offer. But my projections for the fixed rates is that it will start to come down more and more. I think that the rates will be more reflected in the November release. So when right now most rates are not released yet, but there are certain rates that we can take into this environment. So the one we will talk about it a little bit more. As we are going to talk about more oracle stuff, more predicting stuff, more forecasting stuff, keep in mind, we cannot see the future. We are humans like you and I. We just want to help you save as much money as possible. Yeah. So that being said, you also want to know how accurate my projections are. So if you can see, this is my 4,826 line project that tells us roughly where interest rates are going to be. These are the rates that are not updated yet, 3.45 for SORA and effective federal funds rate to be 5.33. And these are the updated numbers, 4.83 and 3.11. What I want to highlight to you is that the projections over here, they are quite similar. Are you able to see that? Everybody that can see that my projections are similar, please type yes. All right, so that I will know that you guys are paying attention and that we can have a more cohesive Thank you so much. Thank you so much, Edwin. Thank you so much, Jenny. Thank you so much, Grace. So we are here to be able to predict where SORA is going to be because Mr. Jerome Powell cut the rates by 0.5. Okay, so when he cut this 0.5, what he says, right, is that he wants to be ahead of the curve rather than behind the curve. They also projected one more rate cut by the end of the year. So right now, the interest rate, they say that they want to cut it to 4.4. Right now is 4.83. So they may cut 0.5, like what Pete is saying, but this is once again based on the totality of incoming data. Talking about data, wow, I tell you, me and Pete, we got blindsided on this one because this thing really, honestly, we cannot tell because they revised down the future projection, and then there is this thing called GCEW report that suggests that payroll numbers are artificially high. Payroll numbers are high means that these unemployment numbers over here, the unemployment number for June was 4. They expect it to become 4.4. So they are saying that if the GCEW report suggests that payroll numbers are artificially high, so unemployment is totally opposite. So if the GCE payroll says high, unemployment is low. Everybody please type low. All right. So this is market information that we do not know. All right. Thank you, Jenny. All right. So that being said, we look at the current numbers. GDP, honestly, we are having a very good year. We are at 3%, which is why I thought that we might not cut. They are expecting our GDP to end off at 2. Unemployment, we currently are at 4.2. They are expecting it to go to 4.4. Thank you, Edwin, for saying low. Thank you, Monique, for saying low. All right. So these two, you can see that this GCEW report has already been factored in within their projection. So this is what they know. All right. The next thing is the PCE inflation and core inflation. PCE currently at 2.5. They're expecting us to end off at 2.3. PCE includes volatile food and energy. Core PCE does not add in our food and energy, our whatever source of nutrients and everything. Yes, so it does not count for food and energy. What this actually means, right, in our report, right, if you read in between the lines, right, we are expecting food and energy prices to fall for at least the FOMC side, and the effective federal funds rate to be cut to 4.83 and one more cut in the future. So that being said, at this point of time, why are they so confident? Because if you're looking at 5.33, right, it is above this portion. It is not even in this chart anymore. This is when we know that the FOMC people are very certain that they want to cut rates. This is when this is what triggered us to then go more in depth and understand what is going on in the market. All right. So how this works is that they take the majority and then they will use that as the current projection. So inflation data. Currently, the PCE, including food, this is including food and energy. Right now is taken, you look at it, 2.7, 2.7, 2.6, 2.5, 2.5. So it's actually showing a downward trend. Whereas if you were to look at PCE excluding food and energy, when you look at this one, right, the trend is more towards 2.8, 2.8, then down to 2.6, 2.6, 2.6, 2.6. So down here, what I can see is that this is held. This is not really showing yet, which is why I have a little bit of fears. All right. Hui Tiak was saying, please repeat again. Payroll numbers are artificial high, which means actual unemployment numbers should be
even
higher.
Yes.
Okay. Yes, that is correct. So if payroll numbers are not supposed to be higher, they are not supposed to be high. They are supposed to be lower, which means unemployment is total opposite. So what happens is unemployment is artificially low. So the federal funds rates, right, was cut by 0.5%. as a strong move by Jerome Powell and the rest of his entourage to be able to tell us, okay, we want to make sure that we fulfill our dual mandate, all right? Which is why I decided to, like, when we are wrong, we do extra more research. Yes, correct, Pete?
Yep.
Because this is when we allow ourselves to be educated. Okay, so the commitment for them not to get behind, they want to be ahead. And there has been a lot of data that came in, two employment report, two inflation report, and GCEW report that suggest that payroll numbers are artificially high with anecdotal data from the Beige Book. So this is when that the Federal Reserve got data that we don't have. And the word anecdotal, right? I don't want to change. I know I'm not supposed to use jargon, but this is the term that they use. So anecdotal, right, is not necessarily true or reliable based on personal accounts rather than facts or research. They are taking in data that are further than what we can see, all right? So this man, Steve Leisman, actually confronted Jerome Powell. Steve asked, hey, last meeting you were saying you are not going to cut 0.5. What happened? And this is what's Jerome Powell's response. And when we are looking at the GCEW report, yeah, you actually dive into the report and you would see this is by the US Bureau of Labor Statistics, and their percentage change for their first quarter is still 4.2. Even diving into the report, we can't really see too much information, which is why I have my which is why everything it's more of a projection, more of a idea, more of a knowing where they might be based on what they do. Their job, they got two jobs. One is maximum employment, which means not many people don't have job. Next is stable prices, which means 2% inflation. At this point of time, if you're looking at the outlook, right, when interest rate cut, right, everyone is usually happy, especially in today's market, where interest rates are artificially high to be pushing down inflation. And right now, Pete, I love your analogy about the car. I tell you, I watch your
Yeah.
update, and I think at this point in time, like what you're saying, we are navigating a bend. All right, we are navigating a bend. So when to pump the brakes and when to hit the accelerate so that you don't kena the car behind. So this is what Jerome Powell is doing by accelerating it, which is a totally different stance from what he has been doing. That said, right, Pete, this is why I actually love coming onto your show, because I have the opportunity to dig your brain. I have the choice. I have the chance to see whether my projections are correct.
Balding.
Hey, I am happy to grow old together with you. It's
Oh, don't let my wife hear it, okay?
can lah.
Okay, all right. Hey guys, did you all learn something from Ethan? Or every time I listen to Ethan talk about interest rate, wow, it's like a lot of information. A lot of information. Okay, so after you all talk about so much, right? Let's play a game. Okay, I'm gonna put a poll in my Telegram. Okay, but I'll post it in the chat as well. Okay, so here it is. Okay, so there's a quick poll, right? And the question is, where do you think the stock market will be? After you hear what Ethan say, where do you think the stock market will be at the year end after the rate cut? Okay, so you can click this to the Telegram channel of my Telegram channel, and you can poll it there. Okay, so whether is it higher or lower, right? So once you click there, let me just show you how it will look like. Okay, all right. So you all can do a quick poll and understand, and then later on I'll show you the poll results. I'll show you the poll results whether most people think that we are going to have a higher stock market or lower stock market. Okay. So can you all see or not? Let me see if I can increase my font. Hey, I cannot. Can I increase my font? No, I can't. Okay, no. Okay, so but you can see the poll over here, right? Ethan, can you see?
Yeah, I already voted already.
Oh, you already voted already. Okay, so there's a poll here, so everybody can go here and poll. Later, I'll show you at the end of the show what's the actual outcome. Okay, I won't poll first because the moment I poll, you can see the result already. Okay, all right. So just now, I don't know whether you all noticed what Ethan said. Okay, later on, I'll bring Ethan back to share the latest bank rates. So don't miss out on that. Okay, so just now, Ethan said, hey, payroll is artificially high. That's what they say. So the theoretical unemployment should be even higher. Okay, I'm not a conspiracy theorist in general. Okay, but I show you something. Jerome Powell said this about unemployment. Okay. I don't know whether how many of you caught this. So basically there was a question put to him and say, why is the unemployment rising? Okay. And he stated one reason. He said one reason is the illegal immigration from the borders causing the unemployment to increase. Right? So guys, can you all type in the chat? Do you think this is the truth or is this BS? Okay, can you all type in the chat? All right. Do you think this is the truth? If you think this is the truth, you type T. If you think this is the BS, you type BS. Okay, right. So when I first heard it, I was like, this is absolute BS. Okay, wow. After I say so many times, I don't know whether I can upload my video onto YouTube. Okay.
Let's do it.
But when I saw this, right, it reaffirmed what I heard from Ethan, is that the actual unemployment rate, right? So now they're saying we are at 4.2% unemployment rate. The actual unemployment rate might be even higher. That they are seeing, they are telling the world is 4.2. But the real unemployment that they are saying could be even higher because they are coming out with all sorts of weird reasons to justify to you why the unemployment is high. Because if it's just not very high, they don't have to come up with this kind of excuses, right? So I like to call BS when I see one. So that gets me very, very excited. Why? Because think about it. The dual mandate. One is price stability, one is employment. And if they see that the unemployment potentially is like 5%, what do you think they're going to do later on? Will they slow down the cut or will they cut more aggressively? Okay? Will they slow down the cut or will they cut more aggressively? Type in the chat. You be the judge, you be the judge. Okay? So this is something that got me very excited. Grace says slow. No, Grace, my view is that you'll be more aggressive. You know why not? Because imagine their role is to see unemployment drop. Let's go back. Their role is to see unemployment drop. But now, the real unemployment that they are seeing and not showing to everybody is actually a lot higher. That's why it talks about cutting 50 basis points. I would not be surprised. Hey, so now maybe it's a time to bet our next $10. I would not be surprised. The next FOMC, they will cut another 50. I would not be surprised. Okay? Because they will want to do all they can, right? To make sure that they enter election without the economy looking like shambles. Very, very crucial. Okay? So this is the unemployment. Now, let me go to the stock market. Let me talk about sentiment very quickly. The last time I did a live stream, which was just about last week, the sentiment was here, maybe like slightly green. But now we are at 64. So the overall sentiment on the market right now, right, is greedy. Quite greedy. Okay, so you can see over here, 62, 64. 1 week ago, it was 54. I write bigger for you to see. 1 month ago, it was 54. Okay, exactly 1 year ago, we were fearful. So now we're a bit greedy. Hey, so guys, Warren Buffett says what? When everyone is greedy, you should be. Okay? And we look at the AAII sentiment. Wow, after the rate cut. Yeah, sorry.
I got something to add.
Hey,
the previous one was the Buffett indicator, right?
No, this is the CNN greed and fear indicator. Yeah.
Right. Because the Buffett indicator at the bottom, right, they use GDP growth.
Oh yeah, they have GDP growth also. Yes.
This one also use, right?
I think so. I'm not quite sure.
Correct. So they divide by the GDP, and at this point of time, GDP may be moving, so you may consider that into your thesis. That's why I just add my 2 cents.
Yeah, can definitely. GDP is actually quite strong, right? So, but I just want to take the overall sentiment. I ask myself, hey, everybody now so greedy. Everybody like kumbaya-ing. Okay, just be very careful. Okay, when everybody sing the same song, means what? The Titanic is sinking. Okay, hey, do you all know that was the last thing they did before Titanic sink? They still come together and sing a song. Okay, so okay. Anyway, sorry, history buff. Okay, so during the FOMC rate cut, can you see the level of greed or bullishness jump from 40 basis point or 40% to 50%? Okay, and the fear dropped from 31 to 26%. This is way, way high. This is, in fact, is close to the 1 year high rate. Okay, and those of you who have been in my community for a long time, especially those of you in my exclusive Stock Market Genius group, right? You know, whenever sentiment is high, wow, my spider sense, all the alarm bells start to ring. Right? Okay, and I don't think I've been wrong before. So let's see. Okay, so later we talk about market. And right now, when you look at the overall market valuation, it is quite high. Okay, this one they basically take the market PE to the mean of it. All right, the best case scenario you can see is that the market is overvalued by 100%. It is quite a scary number, no? It is quite a scary number to say that something is overvalued by 100%. Okay, we are not as overvalued as 08. Just to put it into perspective, maybe I change my pen color over here. Okay, 08, we were here. Now we are here. Right, so be very, very mindful about what you're buying, what you're investing. For those of you who are in SMG, you know that I still do trades, but I'm taking a very defensive position right now in terms of the trades that I do. I don't go all out. I don't do too aggressive short-term calls. All those are out of the picture already. Okay? Right? Okay. But if you look at the longer term, the long term, okay, are we very overvalued? The answer is actually not very. Okay? Not very. Because if you look at, for example, adjusted PE ratio, we call it CAPE, we are okay. Not too bad. I mean, it's a bit high, but not crazily high. Right? And the important thing to remember is that we actually had a very huge correction in valuation during COVID. So right now, it's only natural that it's starting to correct upwards. Okay, so long-term wise, I'm not too fearful. But short-term, I'm a bit more pessimistic. Right? Later, I'll repeat these again. Okay? But remember, these are all backward-looking indicators. The market is often forward-looking. Right? So all these are basically saying, oh yeah, we know what the earning was, so therefore the price is high. But how about the future? Okay, the market always prices in the future, right? So one thing that gives me a lot of comfort. Okay, so guys, I bring you bad news, but I also want to bring you good news. The good news is this. Okay, what am I seeing or what are you seeing? Okay, the blue color line here. Okay, maybe I change my color to red first. The blue color line that you see here is the US Purchasing Manager Index. That means whether the people are confident, right? These are the guys that are responsible for the company to buy raw materials, okay? Their job depends on them being correct, right? Because if they overbuy their raw materials, what happens? And the economy no demand, they will get fired, okay? If they underbuy and the economy demands a lot of their goods, they will also get fired, okay? So they are very sensitive to this. They are often what we call the bellwether kind. They will tell you where the market is going. And you can see quite clear. For example, the purchasing manager index is the blue one. The yellow one is the global rate cut policy. That means when they start cutting rates. For example, you see, the last time they start cutting rates, we start to see the PMI pop. Okay, start to drop like crazy, right? Over here also, when they start to cut rates, the PMI start to drop. And whenever we see PMI drop, means what? The economy slows down a lot. But this time round, very interestingly, what did we see? We see that even after the very aggressive rate hike, the PMI is still very low. Do you see that? Do you see that the PMI on average is about here? Don't care about the outlier. On average, this is about the support level, right? So this gives me a lot of comfort, right? That even after so much rate cut and then subsequently slowly rate hike, right? Our PMI haven't go up yet. That means there's room for the PMI to increase. Where they ease the rate, they let the rate climb up. Sorry, they don't cut so much. Then they will let the PMI come up. Okay, so this one gives me a bit of comfort that okay, I think our purchasing manager, they are quite smart people. Their lifeline is depending on their own prediction. So this part is quite good. Okay. So overall, one key thing as investor, okay, maybe I answer some question. They say, okay, can I quantify long-term, short-term? Okay, very simple. Short-term means anything I will see by this year. In the next 5 to 6 months. Long-term means anything a year and further. Okay. Honestly, actually 1 year also very short. But I know for most of you, I asked you to hold on to a stock for 1 year, right? Hey guys, 1 year, is it long or short to you? Type in the chat. Is 1 year long or short to you? All right. For those of you who are be my long-time student, right? Okay. Those of you who are my student, you realize this. You come in thinking 1 year very long. Then the more you stick around with me, right, the more I brainwash you, I influence you, the more you think 1 year is very long, very short already. Right? Okay, so you can see, those of you 1 year very long one, you need to stick around with me longer. Okay, 1 year actually is very short, no? 1 year is very short. Right? So let's come back to this. The question now is, should I hold a lot of cash as a investor? So guys, what do you think? With all this that you have just heard from me and Ethan, both good news and bad news as an investor, right? Should you be holding a lot of cash right now? Okay, or maybe put in a percentage. What is a percentage of cash you want to hold now to get ready yourself for the market ahead? Okay, right? It's indirectly you polling just now the poll that I put in, right? Because if the market is going to be higher at the year end, you don't want to hold so much cash. If the market is going to be lower by year end, you want to hold more cash, right? Okay, so let's see. So Naresh says, or Kurzman says 30. Okay, great. Irene's 50-50. John is 50. Naresh 20 to 30. KK never give me answer. KK say waiting for the pullback. Hey, how many percent? Grace is 30. Kelvin is 50. Lai Heng 30. Justin is 30. Grace, another Grace, 30 also. Right? Anthony is 50. So most of you are at the 50 range to about maybe 30, 25. Okay? Right. So my reply to you is, don't be stupid. Okay? Hey, really, don't be stupid. Whatever I just told you, right? Okay? Please, for goodness sake, don't hold too much cash. You know why or not? Because let me ask you, what happens with lower interest rate? What will happen? Hey, what's going to happen with lower interest rate? The amount of money flow will go up or go down. Let me ask you. The amount of money, the kaching in the world, it may not be in your bank, but it's the world, okay? It will go up or go down. Can you type in the chat, up or down? Right? So when there's more liquidity, do you want to hold more cash or do you want to hold assets? Do you want to hold cash or do you want to hold assets? Right? So, for example, this is the M2 supply of the major central bank. What is M2? M2 is basically the money, okay, the money supply from the banks. And you can see it has always been going up, right? Only recently they slow down. Can you see now? Previously the slope very, very steep one. Now they slow down a bit. Right? Because after COVID, they needed to stop. Like, hey, print too much, right? So sorry. They need to stop printing a bit. Okay? Right? So this is the M2 supply. The M2 supply is the world 4 major central bank, US, Europe, BOJ, and BOC. Okay? That can project the total market liquid. Right? So this one, very important. Lower interest rate, you will expect this to go up. Why? Because when the banks go and borrow from the central bank cannot say no one. Okay? The central bank is always the person with the final liquidity. They will provide. You ask and it will be given. Right? Now, I put this chart together. Okay, so just now we saw M2 going up. Now the question is, if we look into the past, how has M2 performed in relationship with the stock market? Right? So I just draw until about 2021. Maybe I should have drawn further, but I just show you until 2021. And you can see, the blue line is the M2 line. Blue line, M2 line is this one. This is S&P 500. They follow each other so closely like Siamese twins, you know. Can you see? Right? So let me ask you, with lower interest rate, you expect the M2 global supply to go up, right? So what do you think is going to happen to S&P 500? Okay, that's my take. But bear that in mind is that don't forget along the way, as we see M2 supply go up, for example, there will be pullbacks in the stock market. Okay, you see, M2 supply go up here, right? But we saw 2 major pullback in the start of 2023. So like I said, I am long-term optimistic, but short-term pessimistic because there might be pullbacks like this. All right, but that doesn't mean you should hold a lot of cash. Okay, right? It just means that you should continue to deploy. But if you want to raise a bit of cash, that is okay. Because if you hold too much cash, for example, when coming out of COVID, a lot of people told me, Pete, it's very high already, it's very high already, and they pull out from the market. This is the height of COVID. Even if you are the dumb that invested at the height of COVID, you will be a genius now. But I can tell you, a lot of people over here, they pull out into cash. Even if you are God, you pull out in time. As the market dropped, they're very happy. They're like, yes, the market dropped. I have so much cash. But guess what? The problem is they don't know when to go back in. Because when they start to see the market go up, the first reaction is what? Disbelief. Disdain for the market. Like, huh? No, this is a dead cat bounce. I love that phrase. Why not dead dog? Okay, right? Dead cat bounce. No, it will come down. Then it go up some more. No, this is double dead cat bounce. I don't know what kind of funny terms is that. Until today, they are still believing in dead cat bounce. Okay? Until today, they are still in dead cat bounce. So the important thing is the money is going up higher and higher. Do expect in the long term the stock market to follow suit because the stock market is a liquidity event, right? So don't hold too much cash, right? Because you don't want to be like this guy, where the M2 supply is coming already, the tsunami is coming, this is M2, and you're standing here with all your cash and wondering, why is there no market crisis? And before you know it, the tsunami swept over you, all your cash devalue together, you know. Hey, by the way, do you all notice that US dollar has been devaluing? I don't know whether you notice, US dollars has been devaluing quite a lot. Okay, so don't hold too much cash, hold assets, right? Okay, so what is Pete doing? Okay, so over here, I want to give a very quick disclaimer. None of what I'm going to say here is investment advice, right? It's just me talking to Ethan, right? All of you here are just fly on the wall listening, okay? But I want to share very openly with all my flies in the community. Okay, no, don't call you all flies. I want to share with all my community members, okay, exactly what I'm doing. Number one, am I holding a bit of cash? The answer is yes, but it has reduced. Previously, I was holding about 30%, but I've seen deployed about 5 to 7% already. Okay, sorry, deployed to left 25 to 27%. Right? So that is the amount I'm deploying. Okay, and bear in mind, guys, some of you might say, hey, you deploy 5%, not a lot. Okay, I don't want to brag, but I think my 5% quite big. Okay, so for me, it's not that I don't want to deploy more, it's just that I'm handling a big portfolio. So therefore, 5% is a very big 7-figure, right? So I don't want to go into crazy. So you should act accordingly. It doesn't mean you should be at 25%. It just means to tell you that I'm confident to enter. Okay, next one. Please continue to earn more. And that's what I'm doing, right? I'm doing a lot of things. I'm collaborating with Ethan as well, right? To look at more businesses to come. And you should be doing the same as well. If you only have one income, right, you are in a very bad situation. Why? Because you cannot increase this percentage. Every month, if you have another income number 2, then your cash level will naturally increase even without you selling any assets. Okay, so please do that. Find more side income, do more things. For example, those of you in my community, I always say selling options is one good way, right? I'm making easily 5-figure income in selling options every single month, quite consistently. Okay, so do that, right? And find other businesses that you can do to increase your income. Okay, I know this is a very like cliche, like earn more money, of course, who don't know how to say it, but it is true, right? If you only rely on one income, you need to think harder. Okay, and one way that I know that I can share with you all is through options. That's one good way, option selling. Okay, if you know how to do it, those of you with SMG, you know our past few weeks has been pretty good. Okay, now, the third one is very simple. I shift my investment into assets that loves liquidity. Right? So let's say I'm holding a lot of cash, but I'm still not very confident in the stock market. Fine. Move into assets that loves liquidity. For example, real estate. Okay, especially those of you, how many of y'all here are investing in Singapore real estate? Can you type in SG? Okay, how many of you are investing in Singapore real estate? Type in SG. Okay, think about what will the standard Singaporean be doing the moment we see interest rate drops. Think about all the people that are sitting on the sideline. They have been waiting for interest rate to drop. And now it has happened. Right? So that's why I tell you, asset that loves liquidity. Okay? Real estate, one of my favorite. Cryptocurrencies, later we can talk more about that. But for me, very simple. Hey guys, do you remember what are my standard cryptocurrencies that I invest in? I don't invest in any of the alternate coin or any of those rubbish coin. What are the ones I invest in? Yes, very simple. I just buy into BTC and Ethereum. Okay. For those of you who have been watching me, I was buying when it was 56K. Now there's 60 plus K. I'm still buying, consistently buying. Okay. Another one is actually gold. Now, gold is a very misunderstood asset class. A lot of people thought that gold is the fear metal, you know, that means when everybody damn scared, right, then everybody jump and buy gold. No. Please go and talk to the jeweler, right? Okay, that is selling gold. They will tell you when is gold selling the best. Is when everybody pocket is quite thick, right? So gold loves liquidity. So if you're wondering why is the gold price going up together with stock market, very simple. Gold loves liquidity. Why? Because gold is denominated in what? Hey guys, gold is denominated in what? In US dollar. Okay, so as US dollar go down, gold prices go up. Okay, right? So for those who want to buy gold, very simple. The straightforward way is to go and buy gold coin, but don't buy gold coin. Okay, the simplest way is you can buy ETF. The biggest ETF there is for gold is GLD. Plain and simple. They just hold gold. Okay, there are a lot of Bitcoin and Ethereum ETF already, so you can look into that. Okay, but unfortunately, real estate, is there an ETF? At this moment, no lah. Okay, right? There isn't an ETF. There's REITs, but REITs is not really ETF. Okay. Okay. By the way, for those of you who are in REITs, I don't really like REITs. Okay. Later, if you want to ask me more, you can ask me more. But you can only buy ETF of real estate developers, but you cannot buy real estate ETF itself. Okay. So I recently also bought one property, additional one. Okay. With a friend. I didn't pay ABSD because the friend is didn't own a home. Okay. So I co-join invest with him and we bought one. So that is what I'm doing. I'm telling you everything that I'm doing. You need to contextualize and think for yourself, how is this applicable to you? And why are the big investors moving in this way? Okay, because I'm telling you, when it comes to property, when the interest rate is high, I'm not the only one buying. Okay, in my circle of the big boys, I'm not the only one buying. In fact, in the circle of big boys, I am the small boy already. They buy bigger stuff. They buy bigger stuff. All right. Okay, so one thing is this. When it comes to real estate price, importantly, is that people were telling me, hey, Pete, property price too expensive. Hey, guys, what do y'all think? At this moment, property prices, be it in Singapore, US, Canada, Australia, what's your view? Do you think it's expensive or do you think it's not? Yes or no? Is it expensive or not? Type in the chat. Yes or no? Okay. Is it expensive or not? Ethan say no. Candy say yes. All right. Okay. Now, this is 2023. Hey, do you notice? This chart started 2023. At this point back then, people were telling me property price were expensive. When I do my one-on-one consultation with my clients, they pay me good amount of money when I tell them, hey, your best investment here is probably buying a Singapore property, and tell me, Pete, it's so expensive. It is $2,000 per square foot. And guess where we are right now? We are here. All right. So guys, Singapore property, I'm not trying to promote Singapore property at all costs, but I'm just saying for what it is. It's a very rare asset class whereby there's tons of money backing it and there's so little supply. Very hard to come by. I can't find another country. Maybe if you can let me know, what is another country that has a characteristic like Singapore, where the property price is so resilient and such a small island? Very, very rare. Okay? Very, very rare. So when people say want to wait for buy property, I will say, please don't wait, because the longer you wait, the more harder it is for you to buy. Right? Because why? Real estate loves liquidity. And we just saw interest rate coming down, increasing liquidity. Okay? So this is what I want to share about property. But the okay, so quick one. Advertisement very quickly. For those of you who want my one-on-one consult, okay, I just opened the October slots only, right? You can scan the QR code over here, apply the link. For this session only, those of you who apply, if you go through my filter and I think I can help you, I won't charge you. But I just let you know right now, I'm charging. Okay? Just let you know first. Okay? So for those of you who want is here, okay, just scan the QR code. The link is over here. But the important thing is this. The question is, hey, Pete, what if I already buy a property? Then what else can I do? Okay, so guys, can you tell me, with lower interest rate, property price going up, but if you already own a property, what else can you do to optimize your property? Further optimize. Okay. So I tell you a few things. Number one is ask yourself, can you buy a bigger one? Okay. Right? A bigger one. Why? Because after COVID, everybody loves space. Everybody want more space. So if you can, think about buying a bigger one. If you have a very big one already, think about, can you buy somewhere the location is a bit more central? Okay. But don't have to buy district 9, 10, 11. Just buy more central. Okay. If you have already, if you, on top of that, not just bigger, more central, one more thing that you can immediately look at, yes, like what some of you already say, Angeline and Harold, right, is that you can look at refinancing. You can save more money here. Okay. So with that said, let me bring on Ethan, because right now, I'm very happy Ethan is prepared, okay, to share with all of you currently, okay, how are the Singapore banks looking at interest rate? Okay. Okay, so guys, how many of y'all here will want to know what is the potential interest rate for Singapore in the next 6 months? If you want to know, type in me. Okay, if you want to know, type in me. Because when just now Ethan showed me, I was like, oh my goodness. Okay. I need to review all my assumptions about Singapore property. Okay. Okay, but I don't want to spoil the show. I don't want to spill the beans. Okay, so Ethan, over to you. Share your secret sauce that just now you were telling me.
I will, but first things first, I want to add on to what you said about Singapore property being the very resilient property and choice where we are trying to put more money into. But
Yeah.
that being said, right, there is technical analysis and there is fundamental analysis. So I'm going to contribute a little bit on the fundamental analysis portion to help you guys make a better decision.
Oh,
First things first.
I can see in the community chat a lot of people have bank loans.
It's okay. Means we can save
Good
a
lah,
lot
good
of
lah,
money
good lah.
today.
Yeah.
So, first things first. Why should we invest in Singapore property? Singapore, very small. 726 kilometers square, and not all of it can be accessible. 80% of the land government owned. Our additional buyer stamp duty for foreigners is about 60%. So you know that there is definitely demand there. And on top of that, right, as a small country, bottom 20th, it actually holds on to, Singapore actually holds on to very impressive titles such as second busiest shipping port in the world, second only to Shanghai, best business environment for 15 years in a row, best airport in the world, no natural disaster, political stability, affordable tax rates,
and
low
that's why
crime
our
rate.
population just exceeded 6 million.
Yeah.
Yeah. First time.
Yes.
And it's due to the ability to attract population.
Correct.
Okay.
I love that. And the thing is, right, at this point of time, right, is Singapore property expensive? Yes. And
I would say it's not
to be.
expensive. It's not cheap.
Not cheap. Not cheap.
It's not cheap. It's not cheap. But if you look at other places, guys, please go outside of Singapore and look at other property. For example, if you go to places like California, Vancouver, Toronto, and even Australia, their city center prices are actually higher than us, much higher than us. Okay. Anyway, yeah. So Ethan, let's go into the interest rate part. So what do you see from the banks so far after the FOMC announcement rate cut take place?
Okay. So this is where we want to go into mortgage
part two.
update. Part 2, everybody. If you guys are excited, please say part 2. Okay. So, ladies and gents, we have exciting news. First things first, as interest rates get cut, what happens to our rate, right? So, number one, this is a chart that I just made because Pete, you were talking about this. That's why you can see the sample text. But more importantly, you guys need to know this information, all right? So as you can see, right, this thing, this is my personal calculator. This is how we actually calculate how much you can borrow based on some set formulas by the bank, present value, if those of you are interested. But what happens is that we actually look at this rate, which is the stress test rate. Okay, the stress test rate, right, is usually the most expensive rate. Year 1, usually they give you good rates. Year 2, usually good rates. Year 3, they give you very expensive thereafter rates. Their thereafter rates are usually plus 1% from the current SORA. So if you are looking at last time, it was 3.75 plus 1. Sorry, this is 7. 3.75 plus 1, which give us 4.75. But as we see interest rates coming down, all right, and we can see that stress test, and we can see in our projections data, stress test rates can be cut all the way down to 3.5 or possibly lower. So what this means to you guys, right, is that the next person, the person next to you that is interested in buying the same property now got extra $300,000 worth of bullets. You see, last time they used to be able to afford
same income, right? The income doesn't change, right?
Totally same.
Mm.
Absolutely same income, absolutely same NOA, absolutely same monthly. That, by the way, guys, there are ways to delete this. We'll talk about this later. But it actually reduces this and increases the number. It's insane. But let's talk about that later. But more importantly, right now on this slide, you can see the difference between the property purchase price of 2.213 versus 2.5. It is $300,000 for the same income, for the same profile. Okay. That's why today we want to talk a little bit about the rates also. For different size, you know, they give you different rates. And all these are based on 10 banks. Later I'll talk to you a little bit about that. But you're looking at the current rates. Everybody who are interested in repricing or refinancing, these are today's rates. Once again, right, it is September. It has not been properly cut yet. I am predicting that interest rates are likely to be cut based on the additional information that I got from my own bankers. Jerome Powell himself, he's got his beige book and whatsoever. I got my chat groups with my bankers. So I hear things like, oh, they're having an emergency meeting because Federal Reserve lowered rates higher than expected and whatsoever. And you can see more if those of you who are in Arigato Investors channel, right, you guys will see that they didn't have this. This is a rate that is introduced, like what Pete said the night before. And this is when you can see, ladies and gentlemen, the cut of the rate, 2.9, 2.8. For $2 million, they are giving 2.55. This is the first move. Usually, if this is the first move, other people see all the business go to this particular bank, and then they will cut their own rates to bring you in. So it's a perfect competition kind of situation. For example, X bank give 2.55, then after that Y bank see, hey, how come they give 2.55 for $2 million? Maybe we say $1.5 million, we got 2.55 or something like this. Then they will cut each other, which is where you will win because we work with 10 banks. Okay. There are two kinds of rates right now. The fixed rate is 2-year fixed. And this new section, right, is for your 1-year fixed rate. So year 1 is fixed. Year 1, the fixed rate quite similar. This is once again a different package and subject to bank approval. The first year is fixed. The second year is float. And during the transition to float, you are then offered another package. Whether you want to pick or not, it is completely up to you.
Also, actually, even though it's locked in 2 years, at the
Correct.
second year, you can sort of change again.
Correct. But this one is insider information. So this
okay, so this one only certain bank has. Okay.
Certain bank. And another.
So for those of you who want to know which bank, go and consult Ethan, okay?
Correct.
Because we are putting this in the public sphere, so we cannot mention any bank. Okay,
yes, we cannot.
Okay.
The terms and conditions and whatsoever. These are just the normal rates. Later towards the end, right? I got one other rate that is really quite sexy. Can go up to 2.4 if you really want to optimize it. But the thing is there are a lot of terms and conditions, which is why I don't want to misrepresent and actually state here. All right, I'll go into that later. But we can talk first. Okay, so you see, right now, right, if you're taking today's current rates versus the floating rates, right? If you add today's rate, 3 months SORA, it is 1 month SORA lah, for $1 million. Okay, so we see $1 million, we are doing the comparison here. Okay, $1 million over here, you get SORA plus 0.4.
0.4.
Correct?
So it's about 3.85. Yeah.
3.82.
3.82,
Done the
yeah, okay.
calculation already. So you see, if you're looking at today's rate, right, it will look very, very unfair. It will say that, yeah, why you want to pay 3.82 versus 2.7, right? But you need to understand, there is a lot of information that can go into our consultation that is going to dissect further than something as rudimentary and basic as comparing left and right, the fixed and the float. You need to do a little bit more analysis because this is over $10,000, and with that kind of money involved, multiplied by the number of you guys, I take my work very, very seriously. That said, what do? I'm a mortgage broker. I'm a mortgage consultant. We specialize in mortgages in Singapore. We are one of the few people that got SAMP accreditation. People seem to love us. We got 4.9 on Google, and we are partnered with major banks in Singapore. Our job is to get you the best rate possible, and the best thing is when you go through us, you don't have to annoy 10 banks to be able to get the best rates. We will do the annoyance for you. We will do the comparison for you. Plus, we are going to help you with your structure. In Unbeatable Mortgage, we take things one step further. Today, all we are talking about, right, in our 3-step framework, we have our strategy, our structure, and our rates. Today, we are just focusing on the rates because we want to be able to help as many people as possible. The strategy of when you want to sell, what kind of property you buy, the structure of how you hold it is going to be arguably more important than your rates, okay? Because some people, they get the structure wrong. They have to do very expensive thing like decoupling. Some even in divorce just to make sure that the structure is correct. So for all of you that are not very new, for all of you that are newer, a home loan can get up to 75%. Even HDBs now, HDB recently dropped.
HDB now it dropped to 75. Right,
correct. And then what happens is you are able to typically choose between fixed and floating rate. Every single month, right, your money go into your interest, and some money also go into your principal. What happens to your principal? You go and pay off your outstanding loan. And as it pays off your outstanding loan drop and drop and drop. Eventually, hallelujah, you own the property. Then you can do more interesting things that we can talk about on the call. So once again, past performances are not indicative of future result, but 49.47% is 49.47%. Let's jump into the projections. Okay, over here we can see the latest FOMC, the interest rate going to gonna cut one more time this year, and then after that is going to cut to 3.4 and then to 2.9 and 2.9 and 2.9. This is for 2026, 2027 and longer run. What this means is it actually tells us where SORA is going to rest. Okay, where SORA is going to rest. And what we can then now do is then calculate where SORA is going to be. And this is what most people are here for. This is my Magnus Opus. This is my projections. Okay, so at this current value in mortgage is good. Our SORA rates is now at 3.11%. By the end of this year, as the cut happened, it will drop to 2.83%. Can you structure a 75% loan for me if I am 60? This is a question by Michael Low. Okay, so sorry, you got my attention. Can. So the thing is, right, above 60 years old, right, you can buy at 5 years, but the thing is, it is not that straightforward. You still can buy because 65 minus 60, you get 5 years, which is the minimum that the bank will lend.
You can still take a bit.
you can still take a little bit. But what we do mostly in this situation, your cash is quite a bit already. 60 years old, they take 65 minus age, Michael. But what you can do for a 55% loan, you can take 75 minus age. Then after that, because you're above 60 years old, your CPF count above full retirement
It's a
sum.
bit more complicated lah. So Michael, I would suggest you get into the call with Ethan, then he can explain to you because your case is more unique.
Yeah.
But the short
Yeah.
end of the answer is yes, you can borrow, I think, another 15 years lah, basically.
Correct.
Hey, stick to your interest rate. Don't talk about this.
Yes, sir. Okay, so interest rate going to drop.
Don't get my channel into trouble.
I apologize. Okay, I apologize. I'm a bit too excited to
Hey,
share.
but guys, can you all see the rate that Ethan is talking about, right, for SORA? That's why it makes sense, right, for some people who are thinking about more long term to say, hey, I just want the 3-month SORA plus the 0.4%. Because SORA is likely going to come down. And one thing I can share with you all is this. I don't know whether you remember back in the days, right? When the overall interest rate, back then was SIBOR, when the overall interest rate was very low, the spread wasn't 0.4, you know. The spread was 0.8. Okay? So if you're thinking about, hey, maybe then I just take the fixed rate now until SORA drops, then I go and go to float, right? I would say just be very mindful is that the spread of 0.4 may not always be there. Okay. So for those of you who want to get a bit more long term, then you think the interest rate is coming down, actually a 3-month float plus a very small spread of 0.4 might be worth it. I don't know if you all remember back in the days, the spread was a lot higher, 0.8, even 1%. Yeah. Okay. All right. Okay, Ken. Hey, so Ethan, yesterday you say that some of the banks messaged you and you have something quite interesting to share about the message. You can share now. The message
I can share, and I will. So over here, right, I want to do a bit of quick calculation first. So interest rates are going to drop as calculated over here. So what I did, right, was I go and take the averages. So from what's going to happen, right, is that if we were to take the package now, right, it should start somewhere in December. So I use the December projection numbers to take the average. I take 2.83 plus 2.81 to get 2.51. I get 2.19 plus 1.89 to get 2.03. Then after that, what I do, right, is I calculate both of them based on the year 1 and year 2. So this is the package I was telling you guys about, where you're looking at the first year fixed, second year float. So first year you are saving 2.1K over here based on interest alone, based on the average interest rate. And then on the second year, right, it is similar. So on this straddle, you are actually looking to save 2.1K rather than just going into floating rate straight away. You go for year 1 floating, year 1 fixed, year 2 float, but year 2 you also get a option to change your interest rates from floating rate to fixed lah. Okay. So the rate that just now we were talking about, there was this
Wait, guys,
rate.
you all need to squint your eyes a bit. Okay.
Okay. Can you guys see?
Yeah.
Okay, so this is the terms and condition for the first installment on us. Like I said, the first installment of your mortgage, right, can be paid off by the bank. And then what happens is that this account comes with a lot of terms and conditions.
Wait. So what's the new deal here? The bank pay for your first month installment.
Correct. And
no matter how big it is.
Yes.
Wow.
So what we can do, right, for this kind of interesting promo, right, to take advantage of this promo, this is when we can cut your loan tenure. You cut your loan tenure, your monthly installment become bigger, then after that you get a bigger cut. And that being said, your effective interest rate drop a lot lower lah. Okay, so these kind of rates are available and they don't actually.
Okay. Wow, that's crazy. Guys, do you all understand how powerful this is? You all understand how powerful this is? You all don't understand what I say, don't know. Okay.
Yes, this is not applicable for BUCs.
Okay, not applicable for BUC. Okay. So what Ethan is saying is that when you borrow money, guys, do you understand? If you borrow with a longer tenure, your okay, maybe I share screen so I can draw a bit. Okay. Okay, I have to share wait, I have to share trading view. Okay. Okay. So let's say, guys, if you all borrow a certain amount, let's say 2 million, okay, right? And you borrow for 30 years, your monthly mortgage, let's say, is 6,000. Okay, 6,000. Roughly. I'm not giving a very accurate number. So what Ethan is saying is that, firstly, the bank will say, I will pay you your first month mortgage. So $6,000 rebate to you straight away, no? Okay? But what is the more interesting thing is that if you still take 2 million, but you don't take 30 years, you take lesser. Let's say maybe I'm just giving out a rough number, 15 years. And if I prorate it, right, that means your first month mortgage is 12K. The bank will also offset this 12K for you.
Usually about 10. Usually
10,
about 10.
So the cap is 10, is it?
No, somewhere around 10, because the thing is there is interest and principal portion. The
okay. So 10K
calculations are not
10K
linear.
Okay, so 10K.
Yeah.
So guys, can you see the power? It's not just your first mortgage. You can even have it inflated. Okay, all right. Okay, but later on, of course, does it mean that every month you have to pay 10K?
Yes.
Is it very stressful? How do you adjust this backwards later on? Okay, this one I think Ethan can advise you on a one-on-one basis lah. But hey guys, do you all see how powerful this is? Because right now when you take loan, at most they will do for you is what? They will waive off the legal fee and the valuation fee. That's about it, which is usually about 2 to 3K. And now you can get your first month off. So for those of you who have gonna take a big loan, this is a fantastic new deal. I've never seen this before. This is absolutely new. But I just remortgage. Okay, so I cannot do it already. But for those of you, for those of you who can, please go and take full advantage of this, because this is the money that you can put into the other assets, your stock market, your stuff. Okay, all right. So guys, do you all understand? Or you think this is a good deal? If you think it's a good deal, type in GD. Okay, GD. Okay, all right. So Ethan, but you're saying there's some like unique clauses. So I think the clauses let the student consult you during the one-on-one. I think that's very, very important. Okay?
Absolutely.
Now, okay, anything else to share?
I can take some questions. Does it apply to me at 60 years old? Yes. What about commercial property? This one totally different, but we can chat also. We got commercial specialists. Do say that you are looking for commercial property. We'll get our commercial and valuation specialist to reach out to you. For BUC, any deal. Building under construction at this point of time, there is not much of a deal. There are some deals out there, but not very worthy. I can talk to you guys if you were to talk. Any advice for a loan which is under lock-in period? Yes. If you have a loan during lock-in period, try not to break the lock-in period. And then please reach out to us so that when you are outside of your lock-in period, we can get you really, really good rates.
Yeah. Let me share something. So I don't know how many of y'all understand and appreciate, right, how much mortgage refinance can save you money. So I don't like to talk about things in theory, in fluffy air. So I show you all the actual example. And the actual example is me. Okay. So how much can you save? Okay. So number one, this is my old mortgage. Okay, my old mortgage. This is my investment property. My rent is about 4,400. My old mortgage was 4,511. I still remember this number because every month I pay, so I remember. Hey guys, can you all look at this situation? Good or bad? Okay, this situation, good or bad, to hold on to a property. Okay, let's see if y'all are investor. Is this a good situation or not? Okay, not too good because you get negative cash flow, right? So what I did was I did a refinancing, okay, and because the rate is already lower back then, right? So I dropped my housing loan from 4.511 to 4,031. I saved almost $500 a month. $500 a month, I turned a negative cash flow property into a positive cash flow property. Okay, but that's not the most important thing, because positive cash flow, okay but doesn't seem like a lot, a bit only, right? Okay, $5 a month. But when you look at it, collectively with Ethan's help, right, I can save $6,000 a year, $6,000 a year. Hey guys, $6,000 a year, how many stocks can you buy? how many Apple stocks, how many Amazon stocks. Later I'll talk about the stocks that I'm going to enter this week that you can invest in. Or just buy S&P 500. And this $6,000 you save this year, the next year will grow. The year after it will grow. And the year after it will grow. Right? So that's why you can see how happy I am. Right? Even though, to be very honest, $6,000, to be very frank, it may not be a big figure for some of you. But if you let it compound, it is very, very powerful. Right? So guys, I want you all to not take your mortgage too lightly. I've seen clients whereby after Ethan consult with them, right, then they say, yeah, not a lot one, so they're too lazy. But actually, the laziness cost them thousands of dollars a year. And for my case, it's already not a lot. Right? In Ethan's case, very often, some of them are 10K, 20K of savings a year. Okay? So this is super crucial. Don't let this go to waste. All right. Okay, some of you are asking how to get onto 101. Let me just stretch the screen here while Ethan takes some question. Okay. Then later on, I want to go back to the stock market already. Okay, so this is a very exclusive offer by Ethan because Ethan gonna have some changes to his business structure. Okay, so maybe I don't know whether you want to share now. Up to you. You want to share? If not, it's okay. Okay, if not, it's okay.
All right. So recently I've got the pleasure of having one ex-CFO join me. In my humble team, I'm the only one that's not retired. Most of them are. You've seen both of them. They are extremely high caliber people.
Yeah.
One ex-CFO, one run MNC. However, all of them are here to help people save money. What we've recently done, right, is that we have started charging for certain consultations and things such as when we help people, right, fix their credit, fix their total debt servicing ratio, help them show different set of document to the bank and get an increased number that eventually was able to help them. So we have a lot of these additional services that come with a premium. However, right, at this point of time, right, we are not charging yet as of today. In the future, I dare not promise, but for now, for the next month of from September until October, we have a promo code. This promo code, if you need me to help you, LB is our premium services that help you fix your credit bureau or whatsoever that we normally charge $3,000 to $5,000 for. You let us know that you are here you are here from Pete's community and we are gonna help you, and you just tell us that we are kakilang, can you don't charge? Okay, so
for those of you who don't know, kakilang is a dialect, means our own
people,
our own community. Okay.
Our
KKL, the
own
code word is
community.
KKL. Okay.
KKL, our kakilang, our own self people. We do not bring this to the public, and this is a promo code from now until October. We are not sure if there will be any changes. However, at this point of time, I want to help you guys because your community people also. I want to extend my promo over, and yeah, we are all kakilang.
Yeah, okay. So guys, this is the very special offer that Ethan is bringing to the community, right? He will provide free consultation. It's like a free look at your mortgage, especially for those of you with more interesting cases. Just now some of you all say, hey, if I'm a bit older, or if I have an equity loan, or if I am not eligible yet for repricing, but how do I calculate? Because actually sometimes maybe it's also better to reprice because the breakage fee is a bit lower. A bit more complicated cases, actually, Ethan is very good at it. He's able to use his creative skills to help you guys. Okay, so over here, for BUC, yes, for those of you who want to buy building under construction, aka new launch, okay, Ethan can help you also. So you can scan the QR code over here, or you can go to rebrand.ly/unbeatable loans. Okay,
correct. So and want to add on a little bit on the BUC. Okay, BUC may or may not have promos. There are some that give promo, but more interestingly, right, there are different rates for building under construction.
Correct.
Building under construction, right, you're probably fixed. You're forced to take a floating rate.
Take a floating rate, which I think actually at this moment in time is not a bad idea.
Not a bad idea.
Yeah,
but
it's not a bad idea.
There is a way to actually game it more.
Yeah,
Pete,
correct.
will you advise for 1 month SORA or 3 months SORA?
I think
interest rates are coming down.
I think 1 month. 1 month.
Correct.
Yeah. You want it to update as soon as possible,
Yeah.
Correct or not? Correct, right?
Yeah. You wait for 3 months, you
Hey,
like
I
2
also
more
can be
months.
mortgage broker, okay?
Correct. Uh, if you join us, you'll be in good company lah. But
No lah, cannot
I
lah,
don't
don't
dare
want.
lah.
I too busy already. Okay, to
Of
me is
course.
this. I do what I'm good at, which is the stock market and property, looking at properties. I let you handle the mortgage and safe hands. I feel very safe handing my members to you. Right?
Thank you.
So
Thank you
that is the good thing. Okay. So this is the link over here. Okay, let me just go to the website so that all of y'all will know how to fill in. Because that time there were some people who asked me, hey Pete, how to fill in? Wow. Stress. Okay. So okay, it's a very simple form. It can't get any simpler than this, right? So this is the email, okay? Your name, right? Your contact number. Please make sure your email and contact number is correct so that Ethan can contact you, right? There are some cases where Ethan tell me, hey, this person I can't contact them, the number is wrong. Then too bad, okay? Right? But the important thing also that please let them know what you are intending to do, right? Is it a new loan? Are you refinancing, repricing, gear up? Okay. Or if you're doing commercial property, please type it in so that he can allocate the appropriate experts to help you guys. Okay? All right. Okay. So let's see. Candy is asking what's the difference between the earlier QR code and this one. Okay. The earlier QR code is my property one-on-one where I help my clients to look at what are the properties to buy if you want me to. Okay. How to structure your portfolio, right? This one I work in consultation with Ethan a lot. He always get called from me at in the morning, right? Okay. So that is more like restructuring your portfolio. Let's say you have a property, you don't know what to do with it, or you're not sure what's the next step. Okay. Right. Then this current QR code, okay, let me just bring out the QR code first. Okay. Is for those of you who want to restructure your loan to save more money like me. Right? So this is this is the loan one. Okay? So for those of you with already a loan, please do this. And if you are intending to sell your property and buy and you want my consultation, then the link is in the chat already. Okay? All right. Okay. Any more questions or not? Let's see. Okay, so let's see. Yeah, so Ethan's contact details, screenshot, call him. Okay, so Candice, please apply through this, then he can contact you. Okay, very simple. Okay. Candice, okay, so Candice talk about the next one. Okay? So let me go to the next segment. Okay, so any more questions for Ethan? Very simple. Scan this QR code. His team will get in touch with you. Then you can ask his team. Okay. All right. Fantastic. Okay. So let me go into the stock market now. Okay. So last part already. Okay. So Candice saying my earlier video talking about sell puts and stuff, but I haven't tell you all what. Okay. Very simple, guys. Can we help Candice here? So let's go through this together. If I talk about selling put options, okay, sell put options, what is the expiry date for sell put? Everybody, type in the chat. Usually, I will ask you all to sell put for how long? Maximum. What is the rule that I usually use? Okay, Adai and Grace, very good. Yes, less than 1 month. Okay, try to do like less than 30 days. If you want to do more than that, you can, but that will depend on the stock chart movement. Right? So that one will be more advanced. If I just want to give a rule of thumb, it's 30 days. Okay? For sell put, it's 30 days. If you're doing a buying of call options, BC, it should be more than how long? Everybody type in the chat. It should be more than how long? Okay? Right? Yes, 1 year. Okay? Right? So that you give time for your call options to realize the share price to move up. Okay? Now, how about one of my favorite strategies, synthetic? Okay, so if you don't know what is synthetic, please don't do. You will die without knowing how you die. Okay, but for those of you who know how to do it, you have seen how profitable our synthetic has been. Okay, now synthetic is very simple. I always say synthetic starts from where? Your starting point of doing a synthetic is a what? Those of you who know, type answer in the chat. Yes, your starting point is sell put. So therefore, synthetic, if you are doing a sell put first, you want to do less than 30 days, it is absolutely fine. Your buy call, if you want the premium to cancel out each other, is very likely going to be also less than 30 days. In fact, usually the expiry date will be about the same. Okay? The expiry date will be about the same if you want the premium to cover each other. All right. So with that said, let me just go into the stock that I wanted to do to show you guys. And it's already on the screen. Okay, it's none other than Amazon. Okay. So this stock is no stranger to all of you, right? The important thing is when you look at the weekly chart, okay, you can see that actually Amazon in the last 1 month or so, 2 months ago, had a very big drawdown. And then now we had a really good increase. Okay. So this is great, right? But when I look at the TA, the MACD, the RSI, the stochastics, it doesn't look very overbought yet. So I like what I'm seeing here. Okay. I like what I'm seeing here. So for me, is overall here, Amazon, I'm happy to do sell put, right? That means I'm selling to get a good stock. Maybe I sell at 180, right? Strike price 180, or I can do a long-term buy call. Okay. Now, like I said earlier on, at this moment, I am more of a optimist for long term, but short term, I'm pessimistic. So I'm not going to do too many trades that are going to expire in the short term because I'm not quite sure where this will go. Right? Although when I look at it, it does seem like, you know, year end it should be. Let's look at the poll. Let's look at the poll. Just now we got poll, right? Okay, let's see what's the poll result. Dun 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 dun. Okay, let me share screen. Wow, a lot of you are very confident. Okay, so the poll result is this. So the poll result is that 79% of you say that you'll be higher, 10% say sideways, right? And 11% say lower. Okay, where am I? I'm in the sideways camp. Okay, I do think that we might be more sideways trending. But regardless, if we don't go lower or we go sideways, we want to avoid doing something very short term as well. Okay, so that is the main thing. So for Amazon, very simple. I like the company. The business is great. I can do a buy call or even a simple sell put. Okay, if you do buy call, then you don't have to do 180. You can do closer, about 190. Right? So how much would that cost you? So let's go into maybe option chain to show you guys. Okay, right? So this is the option chain. So let's say I want to choose something that will expire maybe by 25th October. Okay, let me go bigger. Right? If I want to do a sell put by 25th October, okay, I can sell around 180, right? I still can get about close to 1%, you know. Not too bad. 1 month, 1%. Guys, 1 month, 1%, 12 months, 12%. Hey, that's pretty decent money. Okay. But if you feel confident, you feel like, hey, I think now Amazon, market open already, it's still going up. Okay. Right? You want to sell closer, you want to sell 190, 185, sure. Right? You get more premium. Okay. So ultimately, how much premium you take is based on how much you're willing to pay. Right? So for me, I'm happy to go for 185, 180. Right? That gives me a bit of buffer should the market pull back a little bit, but I'm 100% happy to buy the shares should it happen. Okay? Now let's look at buying call options over here. So if you buy call, very simple, just go down the line, look for anything that's above at 2025 September. Okay? So you can look at maybe January. Usually January has a lot of volume. Okay, you can see over here. The January call options, wow, the open interest are huge. Okay, so you can buy a 190, right? That will only cost you about 3,300 for one call option, right? Not too bad. Okay, currently I would say this premium, if I just do a quick calculation, 3350 divided by 190. Okay, it's about 17% for close to 1 and let's see, 16 months. So times 12. Yeah, I'm paying about 13% a year by buying these call options. So not too bad. Pretty good. Right? Generally, I like to go for about maybe 10 to 15%. So that's what I'll do. Okay? All right. So this is the trade that I'm happy to do. I think this is quite stable. Overall, if you look at S&P, so tonight I think it's a good night. Everything is going up, right? Okay. But S&P actually is quite flat. Let's see. Oh, it's actually quite flat. I'm very surprised. Okay, so now you all get what I mean. Okay. So don't cheer the market too loud. When everyone is kumbayaing, be very careful. This kind of very indecisive candle can be quite scary. Okay. Right. Okay. So any questions? Put in the chat. Let me go through the questions very quickly. Candice talking about cold parts. Buy cold parts 250 till end. if I wait for market to drop, then get cheaper premium. You can wait for the price to drop, but that's provided the price drop. Okay, so I think don't time it too much. Candice, what I would suggest is this: whenever I enter a position, right? So let's say I'm here right now. I'm thinking about whether I want to go in and do a call option, right? Maybe it's not the best time. Maybe it will drop from here. But what if it goes up from here? Very simple. The easiest way to overcome this is to ask yourself, how many positions am I going to do? If you're going to do one position, so be it, right? Then you're kind of in a stuck position. But usually when I invest, I would want to scale in my trades. I want to enter in batches. 1, 2, 3, 4, 5. Right? So let's say I enter one now. If it drops further, drop until support level, like this again, I'll enter my second one. Then I'll enter my third one. I'll enter my fourth one. So I will have an average price of somewhere maybe around 550. Right? So that also helps me to not having to time the market too much. Okay? Right? Okay, so Ada is talking about Visa dropping. Yes, fantastic. So let's talk about Visa very quickly. Okay, guys, can you type in the chat, right? Visa getting sued. Okay, so Visa is getting sued for what? Let me just bring you all to the news if you are not aware of. Not Visa Suite. Okay. Okay, so Visa is being sued by the Department of Justice for antitrust. Right? They are saying that, hey, you are a bit too aggressive, right? You are dominating the market, right, over debit cards. Okay. Now, guys, let me ask you, is debit card a big part of the Visa strategy? Hey guys, type in the chat. Is debit card a big part of the Visa strategy? Okay, you have the answer there already, right? In fact, have they settled all these debit card before? The answer is yes. Can you see over here? June this year, they just had a settlement together with MasterCard. They are whole hand buddies. Right? They actually just had a settlement. So this is not new. This whole thing about antitrust, they dominate over debit card, has been the longest thing. And you know why that the government sued them? And I'm not worried. No? Because I can tell you something. No other companies like American Express or whatnot, right, is willing to do debit card. Because they don't make money. Okay? So I don't really think it's a problem. In fact, if they drop further, let's see, they drop how much today? Whoa, nice. Maybe drop some more. Okay? Right? Then I'm happy to buy, Okay? So that's my take on Visa. Very simple. When the market has bad news, I always ask yourself, is it that bad? First. And if it's not that bad, then ask yourself, do I have money to invest? Okay? Very simple one. Right. Okay. Nicole is asking for the sell put buy call self-call strategy. Will slightly bearish market be the right timing? Thinking of doing this on Nvidia. Okay, so for sell put and buy call, I would say, firstly, be very careful. Why are you selling put or buying call? If you are selling put, guys, what does selling put mean? You are committing to what? You are committing to buy share. So let's say if you do a sell put for Nvidia, you do it at 110. That means you are promising that if the share price drop below 110 by a certain date, you will buy the shares. Okay. Same for sell call. Sell call means what? If you are selling 125, if the market share price goes up by 125, you must sell the shares. Right? So here is about buying the shares. Here is about selling the shares. Now, if you long-term like Nvidia and you don't mind buying the shares, then I'll say just go ahead and do it. There's nothing wrong with it. Right? Of course, you must talk about other things like whether this is a good valuation or whatnot. But if your angle is that I want to accumulate Nvidia shares, there's nothing wrong with it. Okay. In fact, I use this very often to accumulate shares of company that I want. In fact, if anything, let me just give you a quick tip. This is not the best strategy to accumulate shares because there's so many times I set a sell put here, and then what happens is the share price just shoot up all the way, Then I don't get the share price increase. I only get the premium. Okay. But Nico, if you're doing it just for gathering premium, just be very mindful. Don't get caught with your pants down. Okay. A lot of people are selling put with no money to back it. They are selling call options with no stock to back it. That is when you get into trouble. Okay. All right. Okay.
Can I share a quote that you said about this?
Yeah. What did I say?
Don't stand in front of the train to pick up quarters.
Yeah, that's true. That's true. Okay. Don't do that. Don't do that. If you don't have the money or the stocks to back it, you are just waiting for the freight train to run you over because it's not a matter of whether it will happen, it's just a matter of when it will happen. Right? And I've seen people, the account get wiped out when they sell call on stocks that shot up like crazy. Or they say, wow, this stock like very good, right? Let me go and sell put. Then the share price drop like nuts. Okay. One classic example is Tupperware. Tupperware just go bankrupt. Okay. Hey, Tupperware also can go bankrupt. Okay. So just remember, nothing is impossible. All right. Okay. Let's see. Okay. Question about Lululemon. Very quick one. Lululemon, not bad. The current trend actually seems to be improving. You can see the charts that I'm drawing here. Yeah. Right. So long term, you must have conviction in Lululemon. Right. So if you like the numbers, this is something that you can potentially look at. Okay. Mike is asking how much to buy. Mike, depend on your portfolio, my friend. You ask people how much to buy, it's like asking people, hey, if I go and eat, how much should I eat a buffet? Depend on how hungry you are, my friend. Okay? So how big is your portfolio? 10K, then you buy accordingly to your 10K. Okay? Hey, but Mike, can I just tell you, 10K not enough. If 10K is all you have, I understand. But if 10K is not all you have, it's just one taster to start investing, right? Is not enough to get you started. Okay, I just give you a clue. The skill set to invest 10K is very different from 100K. The skill set to invest 10K is a different skill set from 100K. Okay, so don't shortchange yourself. I've seen this so many times. People have millions of dollars or hundreds of thousands of dollars. They start with 5K, 10K, and they stuck at 5K and 10K. It's quite stupid. It's quite ridiculous. Yeah. Okay. Jojo asked, should we buy call for V? Wow, that one I cannot answer you. That one is almost like giving advice, right? Cannot say. Okay. Kelvin say, how about vertical spread? What about vertical spread? Your question is a bit empty. Okay. Oh, can this question always very long? Hey, Candice, can you ask simpler question? Okay. If I sell call for stock at $10, okay, let's draw it out. If I sell call for stock at $10, I bought it at 9, okay. The expiry date is October 18, okay. If the share price goes above 10 before October 18, can I close it so that I can sell my... Yes. So yes, if you want to close it, okay, so what she's saying is that she bought the shares at $9. She promised to sell it at 10. The expiry date is here. If the share price goes above before the expiry date, but she don't want to sell the shares, can she close this position so that later on, maybe the share price goes up to like, I don't know, 100, okay? Then she can sell it for much higher share price. The answer is yes, okay? But you will need to pay more money to buy back the call option in the first place. Okay? Right? That's why, to me, is when you're selling a call option, be very careful. If you think that this share is going to go up a lot, then please don't buy it at 9 and sell your call option at $10. That's just capping your gains. That's not very wise. Okay? Sell higher. Okay? Sell higher. That will be my understanding. Okay. Baron is asking, can enlighten me how to start 101? You mean property, is it? Property is the previous link. Wait. How come my stock market live stream become property? Okay, let me go and find the code again, okay? bit.ly property. Is it this one? Let me just double check. Correct. Let me just put here. Property is this one. Okay. For investment stock market, very simple, guys. Just join the Stock Market Genius. I don't do 101 because I only do one to many. So that one you can go and look at it. Stock Market Genius, very simple. Okay. That one need the type or not. Let me see. Okay. Your one I put it here. Okay. Stock Market Genius is here. Okay. Hey guys, by the way, Stock Market Genius, I need to increase price soon because I recently hired an analyst. So the cost is a bit going up. Okay, but for those of you who are already in Stock Market Genius, don't worry. Our grandfather you all over. So you all will pay the old price. Okay, don't worry. Okay. Let's see. If you Candy is asking if there is no price. That means that you probably don't have the option data. That's about it. Okay. I don't want to hold on for too long. Okay, hey guys, don't just ask me question. Any question about for Ethan regarding property, regarding mortgage. Okay. All right. Okay, so before I go, let me answer one more Monique's question. If my sell call is lower than market. What's the best advice if I still want to keep the shares? Okay, so morning, if you still want to keep the shares, very simple. Buy back the call option that you already did. That means you sell a call option, you have to buy back. Okay, you sell the call option, you have to buy back. No choice lah. Okay, there's no choice with that. There's no way to stop that one. Okay, Michael is asking for the stock market course. It's called Stock Market Genius. Okay, now why I call it Stock Market Genius is not because I'm very proud to say that wow I'm a genius is that it's a saying by actually no, is it Warren Buffett? The saying is that who is the genius in the stock market is when everybody is screaming and panicking. The one person that can think clearly is the genius, right? So that's how low the benchmark is, That means you just need to behave rationally, right? Okay, invest properly, invest in the great businesses, know which strategy to execute, okay? Then you are the genius, right? So that's where the inspiration comes from, for stock market genius. Okay, all right. So before I go, once again, anything else? Okay, so the link for Ethan's one, let me just show you again, Okay, so for those of you who are looking at having your mortgage consultation, this one I think is time limited already, right? Because he's going to charge very soon. Okay, free consultation, free look. This one I don't know, if you don't apply for it, you're quite dumb, because it's free. Okay, you look at the loan. If you don't want, if there's nothing to be done, Ethan is very cool. He will tell you nothing to be done. Okay, if there's something to be done, he'll tell you, hey, you can do this to optimize, and he can even tell you which package to take and all your more secret detail one, like those secret that he talked about CPF just now. Okay, those of you who need all this, all this a bit more advanced strategy, to improve your mortgage, to make sure that you get into the property asset class, the property ladder, right? Okay, you can go to Ethan for his consultation. Okay, all right. That's all we have. Okay, let me see anything else. If not, I will just put Ethan's link in the chat one more time. Okay, once again, thank you, Ethan, for coming. And for all of you, tonight the market seems to be reversing a bit. So once again, remember, we are long-term optimistic, but short-term, be more cautious, right? Have a bit of pessimism. Always helps. Okay, and for my Stock Market Genius community, don't worry, I'll be here to guide you along the way. All right, any questions, please post it in the SMG community chat. Okay, if not, that's all we have. Wow, 1.5 hours already. Time passed so quickly. Right, when you enjoy yourself, time passed very quickly.
Yeah, it always happens lah.
Okay.
Not our first overrun, certainly not our
not
last.
our first overrun. Okay, so hopefully next time we'll be more on time. Okay, but you guys, you enjoy yourself now. If you did, all right, please join me to thank Ethan, type in CCC. Okay, and I'll see you all at the next live stream. All right, bye bye.